Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 23rd of November 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. A pretty quiet session, as we would have expected on the world's global foreign exchanges yesterday, with the Americans beginning their Thanksgiving holidays. There were still some talking points and things to flag up. First of all, in the Australian and New Zealand dollars, largely unchanged on yesterday's session, but the tale of the tape over the course of the week is one of fading momentum. They started the week on the front foot, but unfortunately for both the Aussie and the Kiwi, they've faded as we've approached the end of the week. So perhaps a bit of a disappointment to many in the market who were expecting a continued rally. In terms of continuing rallies, though, we've seen a very impressive fight back by the South African rand. Yes, it was down yesterday against the US dollar by about 0.28%, but the weekly move, a gain of 1.68%. And very interestingly now, the rand is trading with a 13 handle, 13.7850, shortly before we recorded the video. Dollar index for its part, down yesterday by around 0.25%. On the week, it's almost flat, trading at 96.46 this morning. Will it to head back towards the 96.2022 area where we kicked off the week on Monday? But it'll be interesting to take a look at that. It's been a rough week for the cryptocurrencies. Bitcoin down by 23.5%. Ether down by nearly 29% over the course of this week. I think tough times would be an understatement really for cryptocurrencies at the moment. Okay, what's on the calendar? Events that may move the markets today. It's a pretty busy calendar, given that Americans are mostly focusing on shopping and eating over the next few days. But to kick off the calendar, we have GDP, gross domestic product data, out of Germany for the third quarter, and that's released at 7 a.m. GMT. To follow, we shall have PMI measures, composite manufacturing and services, out of France at 8:15 GMT, and similar data out of Germany at 8:30 GMT, and those figures also for the month of November. Then at 9 o'clock, composite services and manufacturing PMI data for November is released from the whole of the Eurozone. As ever, there may be a chance to infer something from the French and German data ahead of the wider Eurozone releases. And then we pause till 13:30 and cross the Atlantic for data from Canada, retail sales, ex and inclusive of autos, alongside consumer price index data, and the Bank of Canada's own core inflation measures, and all of this data for the month of October. With the Bank of Canada meeting in the next few weeks, that'll be very interesting to read, of course. And then at 14:45, as I say, the Americans may be on a technical holiday, but market manufacturing PMI data, services data, and composite PMI data are all released for the month of November at 14:45. So a good chance to look at the state of play right across, I should say, the US economic area. Okay, breaking news and comment then that's caught my eye overnight. And first of all, Theresa May will head to Brussels this weekend for a key EU summit where EU leaders could agree to ratify recent draft Brexit deals. However, all 27 of them do need to agree on these deals, and it may be a bit like herding cats, trying to get them all to sign up to what are very broad terms for a UK Brexit. Meanwhile, US consumers will hit the shops today as Black Friday gets into full swing. Estimates suggest that up to 180 millions will shop this year, and they could spend more than the $5 billion total generated in 2017. Brazilian business confidence has jumped almost 10 points to its highest levels since 2010. November's print was at 63.2 versus a quite lowly 53.7 in October. Of course, this is all hope with the election of a new right-wing, free market-orientated president. It would be interesting to see if that confidence is sustained when he takes office for the new year. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? There are an increasing number of signals to suggest that the pressure on the US Federal Reserve to raise rates aggressively in 2019 is easing. Most recently, US bond market expectations about 10-year inflation in the country dipped below 2%, and that's the red line here, and that was the first time they'd done so in 2018. With that in mind then, the December FOMC or Federal Reserve interest rate meeting will take on extra significance as a result, I believe. It'll be interesting to see, won't it, what the PMI data this afternoon suggests about the strength of growth in the US economy. If we see a slight dip in US PMIs, then that could potentially be another one of these dovish signals on interest rates. Right, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account advisor and do take the time to read this risk warning thoroughly. Thank you very much. Have a great weekend.